Hello, everyone. Welcome to the ESS BIZTOOLS Financial Forecasting Package Overview. Today, we're going to be giving you an update on predictive accounting. I have as our guest today, Paul Barnaby, who's the Managing Director of Beyond Accounting Technologies and is the representative for PlanGuru in Australasia and a fair part of Asia. So I'm now going to welcome Paul. So how are you today, Paul?
I'm indeed pretty good, thanks. Thanks, Peter. Yeah.
Okay.
The sun is shining. I woke up this morning. What else could you ask for?
Very good. Okay. Well, on that cheerful note, we're going to pass across to you, Paul.
Okay.
And, you will give us this overview on how to become a certified predictive accountant, which is all part of the ESS BIZTOOLS financial forecasting package, where our subscribers are able to use the PlanGuru software, and you're the expert on it.
Okay, I'm very pleased to have the opportunity to do that. Can you make sure I am able to share my screen, because I don't think I can right now.
Okay, so you can now.
Good. Righty, share screen.
Yes, it's there now, Paul.
It's there now, thank you.
Yep.
I'll just start my slideshow up. Okay, all right. So the title of my presentation today is Be a Hero Virtual CFO. And I'm going to explain to you today how to become a certified predictive accountant, CPA. I know that's a droll abbreviation, but we actually have some trademarking on CPA for certified predictive accountant. And among other things today, I'm going to be talking about how you can gain that qualification and be entitled to use it in marketing to your clients. But first of all, I'd just like to identify the use of the word predictive accounting and exactly what's involved. And it's not actually that difficult, because we're all used to historic revenue statements, balance sheets, and sometimes we've pulled out a cash flow report. Predictive accounting is nothing more or less than doing in the future what we've done with historic data. So a revenue statement, a balance sheet, and a statement of cash flows, all in the traditionally accepted reporting formats. They don't change when you start to go into the future. And how do we do it, or why is it done? It's done so that, obviously, we can be that virtual CFO to our clients, enable faster decisions, allow our clients to unlock increased profits, better cash flow, and achieve their target. But very often, they are just dissatisfied with their business, not because it's unprofitable or having issues, but it's just not achieving their targets. And the very word target itself means future. So unless you're working with your client to help them achieve that future, then you're not really helping them the way you should. So that's why we do it. And how do we do it? You're going to hear me talk this morning, today, about key drivers. We use key drivers to predict upcoming revenue, costs, capital items, any items in the balance sheet, and then translating those to a set of predicted financial statements. So what makes me passionate about predictive accounting? Well, to tell you about that, I'm going to tell you just a little about myself, and you'll understand what happened when I had what's called a light bulb moment. I was 16 years managing partner of a second-tier firm in Wellington, New Zealand, and before I start hearing state of origin or rugby or cricket or any other jibes, which you're very welcome to do, I actually have dual heritage. I have as much Australian heritage as I have New Zealand, and I'm very proud to say that I'm a resident of both countries. But the light bulb moment that I reflected to was one day I went into the office, and my habit in the mornings was go and get a coffee, sit down at my desk, make a to-do list of the targets, my own targets for the day, and get on with it. And this particular day, when I had this light bulb moment, my thought was, I don't want to be here. I have had tax up to the eyeballs. I've had historic data capture and mucking around with up to even higher. And I decided that there was something better that I could be doing with my time. And that's when I decided to totally change my focus on my clients from history to future. I would still look after their history in the practice, obviously, and their compliance, because we do want to keep them out of jail. But I was going to work with them for their future. So I took a leap, not knowing it at the time, into virtual CFO services. And it was interesting. After some months of doing it, I did a survey on several of my clients, and remarkably, I think I'm thinking about 3 or 4 of my probably bigger clients. The comment was the same from every one of those clients. Paul, why did you take so long? We're loving the new services. Why did you take so long to realise that this is what we wanted? And I think you're going to find in your own client database, you may well have a lot of clients like that. So since then, and I'm proud to say, even though it's a good length of time, I've had 20 years of experience of implementing predictive accounting for clients. Obviously, that includes financial analysis, strategic planning, and budgeting and forecasting. But isn't that what a virtual CFO does? So this morning, I'm going to share with you not only my experiences, but I'm going to share with you the tool that I work with and how that can help you in your own practice to minimize the cost of delivering these services and give you a fantastic outcome. So I'm the CEO of my own consulting practice, which is called Beyond Accounting Technologies. And as Peter said, I'm also the regional integration consultant for Asia Pacific for PlanGuru, which is a company based in the US. And all they do is these tools to help you with the budgeting and forecasting aspect of predictive accounting.
And Paul, I think it's interesting to note that the gentleman that developed this software was an accountant.
He was indeed, Peter. And what happened, he was in practice and he sold his practice and he got bored. And not only that, but a few of his past clients got in touch with him and said, look, the new guy's not really good on budgeting. Can you help? And he said, well, I don't want to take you back as clients because I've sold the practice, but why don't I do some software? And that's how it all started.
Right.
Yeah, interesting. So I've worked with many hundreds of CFOs, accountants, and business executives doing exactly this, the predictive accounting, the financial analysis, and of course, the budgets and forecasts. And I like to think that I help you guys out there look like superstars in the eyes of your clients. So how do you take CFO services to your clients? Well, before long, I'm going to run you through PlanGuru, and we'll have a look at the software itself and get a glimpse. Today, there'll only be an opportunity for a glimpse, but I will explain exactly how it works, so you'll know that. But it is very important that you do use the tool, as you'll see in my slides as I go forward a bit. So is that taking CFO services to your clients that leap that I took, or is it a small step? Well, I can tell you it's not a small step. it is quite a large leap, but if you're prepared for it, if you've got the right tools, if you've got the right backup, if you've got the right support, such as you can get from ESS BizTools and Beyond Accounting Technologies and Peter and Paul, to coin a phrase, that's how you're going to do it. So you need to get rid of all your compliance and tax work. And I can hear you saying right now, oh boy, come on, how can I do that? I'm not saying you get rid of it out of the practice. I'm saying you delegate it. You physically don't do it. Your client doesn't need to know that you're making that change. All you've got to do is just make certain it is being looked after. And then when your client rings up and he's got a compliance or more usually a tax question, yes, you'll answer it. And if you don't know the question just off the cuff when he rings, that doesn't matter. You can ring back inside probably 10 or 15 minutes once you've spoken with your colleagues and got the answer to that. Because it is important that you front it, even though you've delegated it. Go and tell them what services they will now receive. Tell them that unless they have a budget in place that you prepare, you don't have to take on the full CFO services, Mr. Client, if you really don't want to, but we think there is value in doing so. But tell them that a budget and forecast is a compulsory minimum content for the service that you provide. And if they don't want to do that, and I did this, tell them maybe you need to go and talk to H&R Block or somebody who really just does tax only, because we are now focused on helping our clients achieve their goals. Like I just said, the financial forecasts are compulsory. And the other thing that's compulsory for yourself is to take the time to learn what makes your business succeed. As Peter has been quoting in some of his material recently, and we picked this up from a practitioner in the US, you need to have a knowledge of your client's business that's not a mile wide and an inch deep, but it's an inch wide and a mile deep. You need to really get to right down to the bottom of what makes your client's business work, and then help them with that by taking the leap and delivering to that. So what are the prerequisites of these virtual CFO services? The prerequisites include discovering and then quantifying what your client's goals are. Sometimes it can be as simple as my net profit is not making wages in a comparable job out there in industry. And you'll be surprised how a lot of your small business owners are perhaps in that category. And that's an easy target to identify and improve on. Double it, triple it. Ensure you've got all the appropriate tools. And I'm not just talking the budget and forecast itself, but make sure you're using as much as you can. There are more than one tool that you should be using, for example, and don't confuse the two. There is, for example, there is a tool out there called Cash Flow Story, and that was started by my good friend Josh Milner, very, very clever guy. And the Cash Flow Story is just that. It's a storytelling tool, which you should have in your toolkit, as well as the likes of PlanGuru, so that you're able to identify on a client-by-client business basis what's appropriate in those particular circumstances. And that leads me to the next aspect. You've got to involve your client with each step. If you don't involve them with the process of even just preparing the budget, and I'll talk a little more about those drivers shortly, you must involve them, because if you involve them, they will own it. They'll own that path going forward. And apart from delegating your tax work, identify in your existing team who there might be there that could help you in this process and be a backup to you, and give them the appropriate training. And we can help you with that as well. And when I say we, I mean ESS BizTools can help you, of course. A lot of you watching this webinar today are existing clients of Peter's, some are not. But yes, you can get the material that you need to train the appropriate team members. And all the software providers are doing this for you anyway. They're trying to make the automation process. I mean, look how simple it is now compared to only a few years ago. The data that's being pulled by just the financial ledger operators, for example, how that's changed. AI, the name has been sort of pinched by Apple recently. They've got a new product called Apple Intelligence, AI for short. And I think that's really, really clever. Okay, so those are the prerequisites. Now, what is contained in CFO services? Well, obviously, a business plan, because the predictive accounting is only part of that. It might be a series of comments about the state of the industry that your client competes in. But it would be an entire business plan, not just the financial stuff. But those predictive accounting reports must be there, the budgets and the cash flows, and don't be afraid to get into KPIs and dashboards, because unless you know what are appropriate KPIs, key performance indicators, for your client, you won't know what switches him on. And that's what you've got to find out. Compulsory again from the delivery of the service is a monthly variance report, pulling the accounting data in, making sure it's up to date as soon as possible, and then doing a comparison budget versus actual report, which you're going to share with your client. And here's the essential component of the virtual CFO. You must have, and I'm going to say at least monthly, some do it quarterly, but I think monthly is far better, because quarterly is only 4 times a year, and it's not really enough for your client to be able to react to the variance reports you're giving him and redo them. And I've said here, preferably at your client's premises. Why? Because on your client's premises, your client's relaxed. Is he relaxed in your often high-rise tower building, parking a problem, office in the middle of the city? No, he's not relaxed, because he's out of his own environment. So go and visit. It was a aspect of the change of my practice that I absolutely loved doing anyway, because I would see something new every day. Okay, and so that meeting after you've done your budget actual comparison is where you compare, talk about it with your client, find out what went right or what went wrong, and then look at, do we need to update any strategies? So you're going to be doing, after that monthly review meeting, you're going to be updating that rolling forecast, because you're not only going to do budgets, but forecasts. And the two are quite different, because a budget is a budget is a budget, and once it's prepared, you put it away, you don't change it. You dig it out and have a look at it every now and again, but then you go on and do the rolling forecast, replacing the original budget figures for a month, for example, with the actuals that have been achieved, and then maybe updating the forecast going forward. And in some cases, you may need to meet again with your client after the data is available and you've done the rolling forecast. You may have reasons why you want to meet again with your client. So I'm just about to show you a PlanGuru itself and how it all works, but I just want to go over how we budget. What are the methodologies that are out there? And when I first started doing budgets, it was what I call traditional budgeting, based on history, adjusting a bit for inflation or any other known major factors, but just using last year and adding a bit and saying that'll be next year. But the problem with that is the historic results may have absolutely nothing to do with what's going to happen next year. You may be changing next year itself. So it's important that you think about those drivers that I talked about, and I'll show you the detail of that in a minute, because last year may be just a waste of time. And then probably 20 odd years ago, yes, zero-based budgeting came along. And the experts in that said, forget the data, forget everything that's happened, start from scratch, build it as though nothing existed in terms of data for this particular company. And that's fine, but that's very, very time consuming. And unfortunately, over the years, with the industry not having the proper tools such as PlanGuru, budgets were expensive for a lot of clients. And so if they've had an experience 15 years ago, they may not be that happy about going onto it today because they relate it to being expensive. And it doesn't have to be. Because the third choice of budgeting methodologies, and the one that I only work with, is key drivers. Working with your client, finding out what's driving sales. Is it units of product that we're going to deal with? Is it services charged by the hour? What is it? But find that driver. Find out what their stock investment will be needed. Find out what their terms of receivables are. And that is what I call drivers. And obviously, it's my clear preference, because to me, it's the only one that works. It works properly. It gives you the best return on the time invested, and it gives you the best methodology. I'm sorry, I've just gone onto an Apple phone, Peter, and I have difficulty making it go quiet.
Okay.
It just reflects that I am a bit busy at the moment. So I guess it's telling us that we must be getting close to the end of the financial year. Okay, so you need a budget. What do? You go and grab Excel, right? Well, I'm going to say wrong. Because Excel and now Google Sheets, although I haven't used that a lot, they're great tools, but they were never built for predictive accounting. You know, if a client rang you up and said, I want an accounting system, what do you recommend? And you say QuickBooks or Xero, that's fine. But would you recommend Excel in that light? If somebody said, what accounting system for recording my data I need to use? Oh, God, Excel. You probably got it already. Well, no. Why use it for predictive accounting? The reason is that it has a very, very high error rate. And that's only one reason why I am probably hard in my language on this particular topic. But there's a fella called Ray Panko. I've never met him. He's at the University of Hawaii, and he's a spreadsheet nerd, N-E-R-D nerd. But he's a great bloke because he is continuing to do research into the use of Excel. And his current research, and you can look it up yourself if you Google him, 91% of published Excel files have got errors in them. And they're not just errors that the author of the spreadsheet found and fixed. They're errors that that author doesn't even know about. Now, how scary is that? So, you know, and I don't like to labour this point, but you've got to use a pre-built, how can I put it? Built for the purpose. So that's where PlanGuru comes in. It's not the only one out there, but I continually compare the market, benefits versus cost, and PlanGuru always wins, certainly on that cost issue. And that's what I'm saying. There's a choice of applications out there. You just need to choose the best for technical investment value. And on that note, I'm just going to go into, I think PlanGuru is open. Right. Okay, so this computer company, it sells hardware, it sells software. And those are the principal drivers. It is very revenue and cost obviously driven. And not only, I'm sorry, I don't know why this is so slow today. It's, I think there we go. Okay. So there I've opened up the, let's get rid of that. Get rid of that. Okay, so there's my computer company, and you can see it's got hardware, printers, software, accessories. And how do I organize those dollars? As I said, I've started with key drivers. We can look at a choice of financial statements, the income statement, the balance sheet, the cash flow, assumptions, and KPIs. So if I look first at the assumptions that I've got, you'll see that we've done unit sales calculations, and PlanGuru has effectively done this for us. So there are the unit sales month by month over the year of the products that we sell. PCs, both box only and complete, printers, multifunction and laser, software, both Microsoft and other, and keyboards, mice and other accessories, and also webcams. And then that's linked back to the revenue statement, as I'll show you in a minute when we go back there. But we can have other assumptions. So, for example, I've got a background for a calculation for wages and salaries, for general expenses, for motor vehicle expenses, et cetera, et cetera. But let's go back to the income statement, and we'll show you how that's calculated. So when I drill down on a particular category, it opens up the projection method, and it's going to tell me that it's tied to those unit sales. So you can see there that I've got the unit sales, and then I've applied a price for a factor, a price of $450. So it's picked up the unit sale, it's multiplying it by this factor here, $450, and that's where that dollar figure comes from in the revenue statement. Same with the cost of sales. The only difference there being that in the cost of sales, we're using the unit sale, but instead of using a selling price, we obviously use a cost price. So that's the revenue statement. You can see there that they're predicting around 3.5 million sales, about 2.3 cost of sales, gross profit of about 1.1, and a net profit after tax of a bit over 300,000. When we have a look at the balance sheet, and we're just loading that up to have a look at that, and I'll show you how that's all working as well when I talk about drivers. There's the balance sheet, and you can see that the cash and cash equivalents is being calculated by PlanGuru. That effectively is the net cash flow, and will be shown in the cash flow report, which I can show you in a moment. But things like what's driving accounts receivable, we're using debtor days. And in this case, I forget what it was exactly. Let's drill down and have a quick look. I think it was something like, 70 days, quite long. And often you'll find that. In fact, Peter, I think Australia still holds that world record, doesn't it? It's very embarrassing. I think
yes,
Australia holds the world record. You can tell me about that?
I think it probably does. That initial report was prepared about 4 years ago. The Small Business Ombudsman made strong representations to the previous federal government to do something about that. And an instruction was given by Mr. Morrison to federal government departments that they were to pay within 30 days. I don't know whether the same instructions went out by the state premiers, because I hear that state departments are a bit slow. But it's a big problem for a lot of SMEs. And at the time, there was a summary issued, Paul, of the days outstanding in other comparable countries. And I remember that France was very low compared to Australia. So other countries can do it. I don't know what our problems are. But we, as accountants, we need to be aware of this. I've been writing some articles lately based around the CEO of MYOB's comments in the Financial Review on the 16th of February, where he said that lack of knowledge of fiscal management was the root cause of a lot of the problems that SMEs are having. Now, that's code language as far as I'm concerned for all of our audience here who are accountants, that they need accountants' assistance.
That's right.
I don't think we can believe that our clients are going to become fiscal managers. I was a CFO in a listed public company. Our CEO was not top of the world on fiscal management. He relied on me to do that. And I think the same thing applies with our SME clients. What you people that are watching this have got to do is make sure your clients understand that you understand fiscal management and you can guide them. And that's what Paul's taking you through today.
Yeah, that's right. Absolutely right, Peter. And that's the virtual CFO role. And I guess the overlying principle I'd like you to accept is this needn't be at huge cost.
No.
You can provide virtual CFO services at a price often your client would be able to pay more for than what you actually charge them, because they get that value out of it. And yes, it's that fiscal management, that virtual CFO that is so important. And that's what I'm showing you how PlanGuru does it. And it converts, let's just cancel that so we can get back to here. It converts those key drivers. So inventory, for example, we're using days of stock on hand. And these are all changeable by you as you go along. So, for example, you can have a look at the key driver for inventory. Let's have a look at what we've got there, and we'll just load that up. And we've got 120 days there, except for the busy period where it drops to 90 days. But you know what would happen if we changed this and we made it say 130 days all the way across the year? Okay, so there we go. We've done that. We've made the update. So here we go. Update again. Thank you. And we'll go back to the balance sheet in a second, and we'll see what that effect that's had. Now, it takes very, very little time to update data, and you can see there now that that's translated to a negative cash flow in October, November, and December. These are the busy months for computer code. And so we've now got a negative cash flow. So I can have a look at the cash flow report. And there we are. I talked before about the accepted formats. Obviously, PlanGuru divides the cash flow up into the formats that are traditionally accepted worldwide, and that is operating, investment, and financing. And so we can see the result of each of those and coming down to that net result. We can see that deficit of 207 in October, 170 in November, 140 in December, and then rolling back into credit as we go along. So that just illustrates how very, very quickly you can make a change to that key driver and then have a look at the result of it.
And Paul,
So,
if I could just make another comment, please. What this is highlighting is, I think, what Paul Robson, the CEO of MYOB, was getting at is clients need to be shown this to understand. Just doing what you just did, just playing with those days in debtors or days in stock or days outstanding for creditors payments also. It's all part of this figure of how much money they've got available in their business, which is where a lot of them are coming undone. Robson says that, and he's in MYOB's research, a lot of businesses start off with a great idea, trade for 6 months, and then they hit a brick wall. And it's because they've miscalculated or misunderstood how all these variables all come to play.
Right. Yep. Absolutely right, Peter. And it's that relationship, if I could just add to what you've just been saying, that relationship that you develop with your client that is so important to deliver that service that the MYOB fellow was talking about. Just a couple of last things I want to show you on PlanGuru itself, because it's a fantastic product. There is so much to it, but that's the other reason I choose PlanGuru, Peter, is because you define what level of sophistication you have in your models on a client-by-client basis. It is not restricted. You can have as many assumptions, for example, as you like, not just those key ones that I'm showing. You obviously bring in actual data and you can have a look at that actual data and compare it to budget and forecast. I'll just go back to the revenue statement just for a moment. And so I haven't brought in any actuals in here. I've just built this file today. But the other thing you can do is a rolling forecast, which is obviously the actuals to date plus the remaining budget. And without just showing you the numbers in exact format, you can choose your budget, select your budget, agree your budget with the client, archive the budget, put it up on the electronic shelf for later looking at. Then you can bring in actuals. Then you can do a rolling forecast. And in that rolling forecast, you can actually change the original budget drivers, but not lose your original budget. And that is, again, why I chose PlanGuru. It is very good in that respect. So you can look at a rolling forecast. Let me see if I can grab one. 24 forecast. I'll just come back a bit. Look, I actually won't worry about that, Peter. I'll just go back to my slides because otherwise I'll be boring people to death. I just get a bit too excited about this. So where I left and went to PlanGuru, and I'll just maximise this, was, yes, get a purpose-built application. I would love you to have PlanGuru, but by no means is it compulsory. Only it is compulsory in the delivery of the joint venture program, which I'm going to talk about now. And we'll get on with what happens with. Okay, so those was just a quick example of some reports that I've flashed by, including things like a dashboard. Clients love dashboards. Numbers bore them to tears. I can remember more than one client when I produced the profit and loss statement and balance sheet, they'd say, "Don't show me that, please, Paul." And half the reason was we hadn't taken the trouble to explain to them how this is all derived, even though it might only be historic data. So you can see I've got budget comparisons here. I've got looking at cash flow. I've got looking at the mixture of hardware sales. How is that made up between the printers and computers, etc., etc. And you can design these reports with your client for your client. And that's, again, this flexibility that I have at my disposal, and I think you should have at your disposal too. So let's have a look at how you become, let's have a look. Slideshow, I'll just make sure this is on current slide. There we go. So how do we make sure that you are a certified predictive accountant? As you can see the little logo up on the right-hand side. And when you've been through this process and qualified, you will be allowed to use not only those words certified predictive accountant, but obviously that logo, if you wish, and obviously the words in your marketing material. So let's have a look at how you become a certified predictive accountant. Well, what you do is you sign up for the joint venture, which has been done with ESS BizTools, which Peter obviously is the CEO, with Beyond Accounting Technologies, my company, which delivers the training. And as you will have gathered from some of my comments, I do have quite a lot of experience in this area, and it is still what switches me on as far as my profession is concerned. So how do we do it? Well, the first thing we're going to give you is unlimited licenses for the PlanGuru software. So you can give that or make that available to any member of your team without affecting cost. What drives the cost of PlanGuru in your practice is the number of clients that you've got on board using it. And within the joint venture delivery, we give you up to 10 clients. Normally out there, it's only 3 before you start paying extra. And it's not a lot extra. It's something like $30 US a month for additional clients. So not hugely expensive in any event. So you get as many licenses as you want to use, then you have the clients up to 10, or you can increase that as you go. Peter will provide his business advisory tools and work papers package, and a lot of you are already familiar with that. If you're not a client of ESS BizTools, I warmly encourage you to have a talk separately to today with Peter about how they can help you. Then you'll get one-on-one implementation by Beyond Accounting Technologies, usually myself, where I will train you through not only the software and how to use it, but how it fits into that delivery of that fiscal management, that predictive accounting whole package that we've been talking about. Well, I'll help you with that. There are 3 online collaborative, because we don't do it for you. We show you how to do it, and we share our knowledge with you in 3 usually half-day modules. Ongoing training is available or questions. We don't just finish on those collaborative training modules. We give you online, I'm talking Beyond Accounting Technologies here, we give you ongoing phone and online support. And that is not cost limited. As long as you're paying your subscription for the package, and we'll talk about that a little later, or Peter will, you will have that ongoing support. Okay, I'd just like to finish up today by saying that part of what I do is I will offer you as a attendee or looking at this webinar today, I will do a free review of your practice as far as predictive accounting is concerned, because you may already be undertaking some of these activities, but not the full-blown virtual CFO, which we've been talking about. So I will, for no charge, normally it would cost around $700, I will have a look at your practice, confidentially, obviously, have a look at what you're doing, look at what your needs are, develop a report on the staff capabilities and training, what existing tools and software you've got, what marketing you've done, and this will help you plan to take those services as well. Because what we need when we do virtual CFO services is the confidence in the ability of our firm. And this is why we need the help of such companies as ESS BizTools, PlanGuru, and Beyond Accounting Technologies to deliver these services. If you want to have a look at a bit more, have a look at my website down the bottom of my contact details. And I'm happy for you to email me. The website's there, but my email address is paul@beyondaccountingtechnologies.com. I should have added that to the slide. And my phone number's there. Feel free to ring me. Peter, that's the end of the official bit of my presentation. If you've got any questions, let me know. We can go out, or comments which you'd like me to enlarge on. Happy to do it. Over to you.
Thank you very much, Paul, for that overview. And no, I've got no additional questions at this stage. As we get feedback from people who view this webinar, we will send the questions through to you. And as part of our delivery of services to the subscribers to this financial forecasting package, we might do a further update in 2 or 3 months' time, if you're available then, just to see if they have any further questions. And we take it from there, because we're obviously very committed to our subscribers, our of ESS BizTools, and also clients of yours, to make sure that these services are implemented to the full extent to help the SME clients in particular to be able to survive the undoubted challenges that are out there in the marketplace at present. And for some of them who want to scale up, to be able to scale up and grow their businesses. And there's still people doing that. And they do need assistance. They need strong CFO type assistance. And I honestly believe that with the PlanGuru packages, your services to guide them, and the ESS BizTools product packages, which cover a wide range of business matters, that we can help these people succeed. So thank you very much, Paul. And I'm just going to finish up now, if I can find my. I don't know if I can.
I've stopped my screen share, Peter. If you need to.
Yeah. I'm thought I was off that. Yeah. So that.
There you go.
So if you need any more information, can you please contact us? Paul's already given you his phone number, but there it is again. And obviously the ESS BizTools contact, our subscribers know all that, but other people may see these recordings. So there's our contact details. And remains for me just to say thank you very much to you, Paul, for your contribution today. And I really believe the new version of PlanGuru is going to go very well in the marketplace. So I think you're going to be a busy man over the next few months.
I think I am, maybe even busier than I want to be, but we'll see. We'll see.
Okay.
You've got to have time for golf, Peter, haven't you?
We'll book you in again for a further update in about 3 months.
Okay, that'll be fine.
Whereby the new software rollout will be more advanced than what it is today, and you will be able to comment. And we'll try to get some specific questions sent into us first, so you can prepare an answer to those and show people
what a good idea
how to handle that particular issue or problem that you may have. So please note that down. If you've got some clients that have got some very interesting or curly business type financial issues that you want solved in the financial forecasting packages, the predictive accounting processes, you can send them through to us and I'll give them to Paul and we'll make sure that he covers those in his presentation, which I think will give you a greater in-depth of feedback. So thank you very much, Paul. I'll catch up with you. And
Okay,
to everyone watching, thank you for being with us. And as I've said before, if you've got any questions or comments, please send me an email. And if you've got emails or questions directly for Paul, I'll pass them on to him so he can get back to you. Thank you. Bye-bye.
Thank you. Bye.